You want to make money at this, right? Weekly commodity trend survey, attractive, hunting longs, that kind of idea. When markets are down, they're against their lows, and nobody in the public is interested, and Gucci sweater wearers are nowhere to be found, right? Because the public has no interest in this whatsoever. You, as a professional in this space, now must be paying attention. As simple as that. See tons and tons of names that look exactly like that. The message really is no different. And then, if you have a very low risk tolerance, then you just get in there and you just nanny nibble away, maybe a 0.5%, 0.5%, 0.5%, 0.5%. Just slowly pick this thing up, and maybe we go to new lows. Maybe this is the low. Who knows? Really, you're not even that interested. We're down at the bottom end of the range. You just put yourself on that nanny nibble accumulation strategy. If you want to time your purchases and you fancy yourself a badass motherfucking trader, well, I would, I've told you repeatedly, and hopefully this isn't news, but just really basic, that these bottoms like to look like saucers. They very rarely look like V's and go straight up. So hopefully you can see the saucer nature of this low. And really, there's even prettier saucer right down in there. And you might even argue this is what they would call an Adam and an Eve. So take a screenshot of that. That's extremely valuable information. This is the way markets like to bottom. Nothing out of the ordinary here whatsoever. And I would expect that you're going to see something very similar here over the next 4 or 5 months. You might even have a dead cat bounce here, like this is our summer silly season rally. And if you can sneak in here and bang out doubles on these rallies, I would highly suggest you do that, right? Establish risk-free trade so that when the next big ass, stupid, insane bull market comes, you've already got that free position. You have no risk whatsoever. And that's the way you play this game to win. You want to try and time your purchases a little bit better? You can always drill down to a lower time frame and sneak in, W's and 2-to-1s and all that kind of fun stuff. But I would actually say that to keep it really easy, hunt for this kind of pattern where you have your V bottom, dead cat bounce, test the lows, put in a long wide W, and then you've got a pretty good base, and there's your rally. And I would fully expect something along those lines to happen here. No question whatsoever. So this looks like every other altcoin, no different, basically the same as everything else. Can you take a look at token versus USDT on BVBIT, please? Is there any other? Oh, there's BYBIT up top there. All right, let's look at this one. All right, I would say you're probably still a bit early on calling the bottom, especially if we think about things like the saucer bottoms. You might even argue that, well, there is your trend line, and there's your market structure trend line. So what's the definition? What is this price pattern? I'd be curious to see whether any of you even know what that is. Pretty straightforward. Don't overthink this. A descending wedge. Of course, Adam would know that. What a badass. All right, so you can call it a descending wedge. You can call it a falling wedge. Now, who can tell me, by definition, a descending wedge is what? So a descending wedge, by definition, is bullish. That means that at some point, this thing should break out. Now, this will be an interesting question for you all. Let's see if Meg can answer this. By definition, at what point should we actually see these wedges and triangles resolve themselves? And I have seen this repeatedly over my career. So I will attest to the fact that this is usually generally pretty accurate. Oh, nice, Meg. You are so awesome. So what I would say is we know what the wedge's size is. So that means we can go like this and like that. We know there's the top. And we know that's the bottom. So we know that it's 279 bars. And by definition, according to Meg, we should. And how would I do that? Let's go. Actually, the easiest way to do this is probably go 279 times 279 times 0.66. There's your answer. 184 bars. So where the hell's that? 184. So this says that we should probably resolve this wedge somewhere there. That's actually interesting too, because that's sort of, remember our conversation about things like eclipses? Notice 16th of September, we enter the eclipse window. And I might argue that something like Bitcoin, I think, notice, isn't it interesting? Look how Bitcoin's triangle actually comes to a resolution right at the end of that eclipse window. I don't know whether that's accurate or not. That's a bit spooky though, eh? So, this triangle, ironically enough, it should probably come to a fruition somewhere around here. And also too, I've said this repeatedly, that I think that our little dead cat bounce rally that's happening right now, it's basically going to the market's going to move up here into this FOMC event. So I wouldn't be surprised that this consolidation finishes. It comes to some sort of fruition right there. But that means that, between here and here, this is your playground, right? All along here. I would say price could very easily trade anywhere in there. So, do I have like a pound the table? This is screaming buy. I gotta get in there and buy. Turn those machines back on. Oh, there's a cute little W that's in here right there. Could you buy that W and risk to a break of the lows? Scary thing with these descending wedges though is you can see that price could, if it wanted to, come down here and bang along this wedge bottom and of course clean out that low. So that is very realistic possibility. I would only say that this thing has fully bottomed and turned if we see things like weekly W's. And right now all this is it's an inside bar. And that's fine. Inside bars, it's bullish setup, right? You buy, ironically enough, on the weekly basis, you buy the inside bar here. You buy the breakout there at 7602, but you got to risk all the way down to the bottom, 52. So you got to risk like 2 cents or basically about 30% of your capital. Do you want to take that kind of risk? Yeah, that's probably a little bit more than most people here would like to take. Interesting how just in the short term, we're getting a big fat 8 here now on the Tom DeMark. So I wouldn't be surprised if our short-term rally here is probably nearing some sort of end. We could probably even do like a fog and bomb off of there. And yeah, what a big surprise. 2.618 is basically candle body highs for trade location. Wicks and tails like to be eaten. These little bulls here would love to get released, that kind of thing. I wouldn't be surprised if there's some sort of pivot right here. So at this point, what I would suggest is there's your uptrend. I like the idea that if you are going to buy, that you try and hunt reload zones. It's typical Brian stuff. So I don't know where the top is as it is right now. I could, sort of sneak my way in on some sort of test of these lows. That tail right there, a bunch of trap bears would love to get out. Also notice too, candle body lows for trade location. This actually is kind of like that little SOL name that I was showing you that I'm trying to buy, but didn't get a fill. If I wanted to buy this thing now, I'd have to, work bids down below and hope that we get some sort of pullback here. I can't really chase that way up there. And then, if we look at this from a bigger picture, as I had said earlier, and you can see it here, right? This actually is a perfect, this is probably exactly what the market's going to do. It's almost exactly the same. So you can see we go there, almost really kind of down to there, and then it's not really a descending wedge. That's more like a channel. Maybe you could go, yeah, there we go. So is that your descending wedge? Should we have been thinking about a breakout 2/3 the apex somewhere in this area? Turns out this needed to happen over here. Actually, you know what? It might have even gone off as say something like maybe even like that. I don't know. But lower lows, lower highs, descending wedge. Is that 2/3 the apex where it broke? It's pretty close. And then, our rule, get on the other side of the trend line, W on the other side of the trend line. Hopefully what you see here is, hey, look at that. That looks like one of those saucers. And of course, your big ass, again, weekly W, the bottom's in is right there. And woohoo, away we go. So zooming here to today, does that look like one of those saucer bottoms? Not really. There's a very fast trend line. It could be lost really easily. And if it is lost, just be cognizant. If we slip back below this trend line and then we actually go and M out, ooh, that's not good. That definitely means we got to come back down and test these lows. So the fact that this trend line is not really very well established, it's actually kind of steep. We would prefer to see trend lines a little bit bit shallower, along those kind of lines, where at least, the pullback into the trend line is going to be support. As this stands right now, we lose this trend line, there's nothing holding this market up. And as I said, don't be shocked if you see that this thing actually goes and takes out this low, just like it did here. Same sort of thing down the road, because there is no uptrend here yet. So be cognizant of that. And, on a weekly basis, any signs of W's? No. So if anything, this is just kind of a cute little trade, probably coming into price objectives here. If you took this trade and you're living, 2-to-1s, live by the sword, die by the sword kind of idea. Notice interesting, 2-to-1 is basically 4.669. I don't think that's an accident. So what this says to me, and if I was, kind of swing trading this, that kind of thing, I would say if we do get to 50% of the anticipated move, you're going to buy on the breakout. So boom, you're long. Your stops, of course, against these lows. Market works higher highs and higher lows. Awesome. Looks great. If we can hit 50% of that anticipated move, then you move your stop to scratch. And if the market pulls back, then you just walk away at scratch. And I'd have an open order to be selling at this 4.669. You don't have to sell all of it. The breakout here was 6, better part of 7. So that's 10. So, that's basically about a 50% return on your money, which isn't bad. I might say, sell part of it there, move your stop. Your stop was already moved to scratch. So on the remainder, whatever you got, and then maybe even place another big chunk for sale up at 877s, which is nothing more than just, if this thing gets a head of steam behind it, it's going to bang up and tag that trend line. And we could probably also do things like reload zones at 50%. But what do you think the odds are? That's 61.8. I'd say probably pretty good. There you go. So I don't think that's an accident. That's the way that I would approach this. I would say, great, you bought your W, way to go. 2-to-1s, try and pay yourself if this 4.669 is traded to. At the very least, if we hit 2.618, 50% of the anticipated range, probably a good idea at the very least just to move your stop to scratch, and so you don't get hurt. And then, start spoon feeding to the market as we hit these respective levels on the way up.